Hello, good afternoon. Today on the marketplace, prices of petroleum products are expected to go up marginally at the pumps this week, but some marketers hint of plans to absorb it. Also, pickup in economic activities impacts positively on manufacturing as demand for goods surges. We hear from the Association of Ghana Industries. And Customs Division of the Ghana Revenue Authority puts in place mechanisms to facilitate strict adherence to rules of origin criteria as part of the Continental Free Trade Agreement, which begins next year. Thanks for being with us. Details right after this break. Welcome back, everyone, to the marketplace. Now, demand for goods manufactured by local industries has witnessed a significant surge. This is in line with the pickup in economic activities post easing of COVID-19 restrictions. Recent Bank of Ghana reports suggest economic pickup to levels even higher than pre-COVID-19 levels. This has resulted in the central bank projecting a 2.5% end-of-year growth target. Chief Executive of the Association of Ghana Industries, Setchuma Kwabwa, has been speaking to Joy Business.
I would say that the information we've picked from the ground, from our members, we are interacting with our members on a regular basis, and indications are that indeed Bank of Ghana's position is right. Economy is picking up gradually. Industries are able to do more business, they're able to move around, buy their raw materials, do the processing, and then able to send to the markets. One area that they had a big challenge was the demand. The demand side was going down because people were concentrating on few products that are of essential nature. But I think as the economy is opening up, demand for other goods are coming on. You notice that conferences are gradually coming out. People are doing their awards and all that, even though the numbers are not as big. And therefore, the demand is still not as high. At least there's a growth in demand. And therefore, it is true that the economy is gradually picking up, and the members are really feeling it on the ground.
Just not to backtrack a little bit, but some will also say that has this impacted on demands of goods that your members are manufacturing or still? Because one critical statement that the Bank of Ghana statement made was that we are even back to higher than pre-COVID levels, unless these goods are coming in from outside. Has this really impacted on what your members are manufacturing in terms of goods and raw products and all the rest?
I think generally speaking, all goods are seeing some increase in demand. And I think that is quite significant, and it's a positive development. But if you say that it is higher than pre-COVID levels, we need to look at the data, and I think the data will help us in doing that analysis. Unfortunately, I've not done that kind of analysis, but I can say that since the COVID period, since the lockdown up to today, there has been significant improvement in terms of growth in demand for general goods, and therefore, as you're asking, it's really impacting on members in terms of growth in volumes for all kinds of products. You know, those producing various products like the aluminium, like clothing, food and beverage products, and so on, agricultural products. So across board, there's increase in demand, and I think that is positive. But we would examine the data and see whether before COVID, the volumes we were doing today is better. But don't also forget that we're inching closely to Christmas, and it's also the trend that normally in the last quarter of the year, business usually pick up because demand for various goods to market for Christmas and all that grows. So naturally, it is also possible that getting to the latter part of the year, demand would grow, and it could probably even surpass the pre-COVID levels. So, but we need to look at the data and examine it.
Now, the Continental Free Trade Agreement Secretariat, in collaboration with the African Union, will unveil a new trading platform. Now, the move is to ensure that physical barriers are minimized when the trade pact begins next year. General Secretary of the Secretariat, Wamkeli Meni, made the disclosure when he addressed the second national conference on implementation of AFTA. The African Union has expressed confidence that trading under the Continental Free Trade Area will begin in January next year, barring any last-minute changes. After several negotiations and discussions among member states, the continent still faces the challenge of trade barriers, including fiscal barriers at various borders. This has compelled Ghana and other West African nations to explore the use of technology to increase benefit from the agreement. According to the Secretary General, Wemkeli Mene, the Africa Digital Transformation Platform will go live before trading begins.
We are exploring various digital-enabled platforms that are aimed at enhancing market access and trade connectivity of small-medium enterprises to new markets across the African continent. We shall collaborate with the African Union Commission to leverage the African Continental Free Trade Area to accelerate the implementation of the digital transformation strategy for Africa in order to transform production systems, promote industrialization and the use of advanced technology in all sectors of the production value chain. We intend to launch this digital platform for trade for SMEs connectivity in time for the start of trading under the AfCFTA, which is scheduled for the 1st of January 2021.
On his part, President Akufo-Addo assured that Ghana as a country has put in place all the necessary blocks to ensure it benefits from the agreement. He indicated that policies like the One District, One Factory and planting for food and exports are geared towards achieving this goal.
Development of industrial parks and special economic zones in collaboration with the private sector to make available the space for industrial establishments, obtain the economies of scale. Underpinning all these initiatives is the development of a robust and resilient macroeconomy, which will establish a strong foundation for the structural transformation of the Ghanaian economy. I draw attention to these programs and projects to reiterate the point that in Ghana, we have already laid the building blocks for our private sector to harness the benefits of AfCFTA. Additionally, the National Export Development Strategy serves as an appropriate policy framework for coordinating and consolidating public sector support for the development of exports.
The ongoing national two-day conference is under the theme Empowering Ghanaian Businesses to Harness the Benefits of the African Continental Free Trade Area Agreement under the framework of the National Export Development Strategy. A Ben Sabotage report for Joy Business. Meanwhile, the Customs Division of the Ghana Revenue Authority has put in place all the necessary measures to ensure that the rules of origin criteria under the agreement, the Continental Free Trade Agreement, is strictly adhered to by all member countries. The division, together with its counterpart in the ECOWAS region, is expected to submit the tariff offer to the African Union before the end of the year. Now, this will ensure that all countries abide by the law. Speaking to Joy Business, Assistant Commissioner in charge of AFTA, Fenchen Akoto, assured that Ghana is in the best position to implement all the custom rules under the agreement.
African Continental Free Trade Agreement area, just like any other free trade agreement, has a setup that we'll have to deal with in trying to fulfill all processes and agreements as far as what we call AFTA is concerned. You know, this has to do with goods that will trade among African countries. And I say trade among African countries because there are set rules and regulations that one will have to go through in order to be able to get the full benefit of this free trade agreement area that we are talking about. And these set rules are what we call in customs rules of origin. We have a set of rules that will govern the trading of these goods among African countries. It is only when you meet the requirements or the regulations of these set rules that we deem your goods to be originating, and they are the only goods that will benefit from this free trade agreement area. So as traders, people in trade, will have to be conversant with these set rules and regulations. Not only trade, but we in customs as well have to be very conversant with these rules that we have put in place for trading among ourselves in Africa.
Any special treatment to goods coming in from neighboring countries?
Yes, the benefit or the special dispensation there is that those goods have their import duty waived. You don't pay import duty on goods that qualify. Let's take note, not all goods, if they have qualified by the rules of origin that we have agreed among ourselves, then the import duties are waived on those imports into our country. So also when we are also exporting to any country, we once our goods qualify, the import duties are waived in those countries. Yes.
All right, let's turn attention to petroleum products, and prices of petroleum products are expected to go up marginally this week. Now, this is in line with the expected 2-week review of the product. Now, is this a sign of an end of months of decline? Well, there's more in the following Business Desk report.
Based on industry data and projections by Joy Business, prices of diesel and petrol products are expected to go up by just under 1%, while LPG should witness a 3% jump per kilogram. This should mean that a liter of these two products should be going for 4 cedis 81 pesos, translates into about 22 cedis per gallon. The increase Joy Business is learning has to do with the pickup in global demand for crude oil, which has impacted prices on the international market. However, our engagement with some oil marketing companies indicates that they will be absorbing the expected increase that should start from Monday. According to them, the increase is not that significant to warrant any changes at the pumps. For some, the concern is whether or not the recent stability and marginal reduction witnessed in prices are over, and that consumers should brace themselves for some hikes in the coming 2 months before the year ends. The Chamber of Petroleum Consumers in their recent analysis noted that the coming months may see some huge hikes based on the current development on the international market. Executive Secretary Duncan Amoah has maintained that unless government reviews the current taxes on the price build-up, consumers should brace themselves up for more hikes at the pumps. However, government, on the other hand, has not given an indication that it may heed to the calls to review the tax build-up on petroleum products.
Well, to discuss this further, I'm joined by Duncan Amoah, who is Executive Secretary of COPEC. Thanks for your time this afternoon. So there's a pickup in demand globally. Now we're hearing that OMCs are planning to absorb the increase in prices. That should be good news, isn't it?
Well, indeed, we would expect nothing of increases. We would have expected that between now and December, Ghanaians could get the sort of relief that they would need in order to be able to plan their budgets. Unfortunately, like you indicated, global demand is peaking. And so once that happens, and this COVID pandemic also seemed to not be doing the kind of damage it did somewhere in February, March, then one would expect that global demand will probably be peaking back to the 100 million barrels per day. That would mean only one thing, that prices would head south. Fortunately, like you indicated, the kind of differentials you are seeing for this window may not warrant any increases at the pumps. And so I'll be surprised to see any of the major companies come to Ghanaians with any increases. These are marginal, escalations that could easily be absorbed if you look at their own OMC, should I call it, margins. And so we are not expecting any increases at all. Rather, we would have wished to see further reductions, 1% here and there between now and December, based on some calculations that we had done earlier. But then again, you cannot also predict international development, especially with the U.S. elections drawing closer. inventories not being picked as much as they would have picked a month or two ago. It means that there will be a certain minimal shortfall within the global system, and that would, lead to some of the increases we are seeing. Although, like you rightfully put it, these increases are not that significant to see Ghanaians now have to pay more at the pumps. We are happy that the OMCs are going to absorb this one.
Interesting you talk about the predictability of oil prices going forward from now to December. We are not really sure what's going to be like. My next question was going to be whether or not things are going to stay like this for a long while, and for how long can the OMCs absorb the prices?
We would be surprised to see crude go beyond the 44, 45. We'll be very surprised. The U.S. shale production is still around the corner. If crude prices go above 45, the shale producers who now have had to decline their productions would now come back to the market, because then it will be profitable. And so if you look at somewhere in March, the American system was throwing onto the market about 13 million barrels per day. As we speak today, it's declined to almost 10 million. What it means is that the 3 million cut, if prices should surge or go back to the 50s, the Americans are likely to come back flooding the markets. That would also have another declining effect on crude prices, and for that matter, fuel prices overall. We are not expecting prices to really go up, but like you did indicate, any geopolitical global movements is likely to see some of these escalations here and there. But in truth, between now and December, we will be expecting that the global market, considering the fact that there's a lot of supply in the system, which still outstrips demand, we would not be expecting that petrol prices will go up that much at the pumps if it doesn't go down altogether. And then again, you also made mention of the OMCs. There's a news report today. Quite a good number of them are owing government. Government, we know, will still need those revenues. And so whatever checks and balances or adjustments that would need to be done around this time, so that some of them can offset their indebtedness to the central government, we would go for that, although we are also not happy that prices should go up against Ghanaians. But if it means that some 1, 2, 3 pesos here and there, in order that they will be able to make good their indebtedness to the central government, we would not want to see the OMCs collapse. And so whatever needs to be done to make them be able to sustain in business should be done. But then again, we are still expecting prices to go down between now and December.
Then the issue of tax on price build-up comes again. We had that in the report that played just before our conversation. Is that still relevant now?
Darrell, the only way forward we have said in an electioneering year is for Parliament to take a second look at the way we tax petroleum products in the country. Because it's an electioneering period, you don't hear much of government needing money and putting or slapping taxes on fuel products. And so we have said that the period after elections 2020, Ghanaians may be in for quite a turbulent or rough ride, because whatever happens, whichever way the elections will go, you would expect whoever the finance minister is, could be, to come back looking for revenue. And you and I know the lowest hanging fruit for revenue for government often is petroleum taxes. And so we have advocated, and we still advocate, that Parliament should place a capping on the amount of taxes that finance ministers can collect from Ghanaians. That said, these finance ministers will now have the arduous task of looking for revenue elsewhere, instead of heaping everything onto petroleum products. Because today, as we speak, if you do a comparative analysis of the sub-region, the Nigerian counterparts who produce oil as we produce and import as we import, they have similar dynamics, are still selling petrol for around 11 cedis, 20 pesos. We are around 21 Ghana cedis, going on to 20 if there are any increases. We say that these taxes play a larger role. Right. Government will need to take a second look at them, Government will need to raise revenue, but revenue should not be derived only from petroleum taxes. That is what we are calling on authorities to have a second look at, particularly Parliament.
Okay. Thanks very much for your time this afternoon, Duncan Amwa. As always, a pleasure to speak with you. Now, Finance Minister Ken Ofori-Atta says government's project to enable Ghanaians own their own homes will be piloted in 2 schemes. These are the Real Estate Investment Trust and the National Housing and Mortgage Fund. Government is targeting the development of about 2 million housing units. According to the Finance Minister, the schemes are intended to boost the housing market to make mortgages and rentals more affordable to all citizens.
Really, for us at the ministry, as the minister stated, there have been a lot of priorities that we've had to engage in with all of the other amenities that you all are used to. I think it's time for housing, and the issue that we determined was that the financing costs were too high. So how are you able to create a mortgage and give the type of subsidy to enable public or private sector people to now take that? So one of the transition issues is the rent to own, so that as you pay, gradually we turn it into a mortgage for you to be able to participate in that. So if you look at the district hospitals, for example, suddenly all of the country is going to have it. It is quite clear and obvious to me that maybe attaching a housing project to each of those properties will create the type of beauty that the minister was talking about. So we are looking to examine that. And we tried a 204 home project this year, even in the COVID year, and we've been able to do that in 9 months, which we would to next week. So we really are kind of building up to say, well, you educate people, you feed people, people must have a home that they own, and stop all this sort of landlord bullying and 2 years of rent advance. But it will take long to do. I mean, 2 million homes, you know, even if you say it's $20,000 each, that's what, maybe $4 billion, you know, so it will take time. But at least we are making a good start at it, and, you know, we trust God to help us to continue in this vein. Yeah, we gave a 2% from government so that we can reduce that. The banks would also, you know, accumulate resources, but the blended rate should not go beyond 10 or 12%. Yeah. So really, I mean, our hope is that we find an innovative way to reduce the cost of financing for citizens, and then also that Grader and Co. find ways of reducing the cost of inputs, so that combination we should be able to deliver.
And that's the marketplace this afternoon. Thanks for watching. My name is Darryl Kwao.